In today's video, we're going to have a closer look at some vaccines. From there, we're also going to be looking at what my expectations for the Federal Reserve announcements tomorrow are going to be. And in addition to all that, I'm going to have a quick look at gold and why it's gone up to near the 2,000 barrier. Hello and welcome to another acysecurities market update. My name is Alastair Schultz and I'm going to be a host through today's trading journey. Now, the first thing we're going to have a look at today is just a little bit of a virus update for you. We have more than 16 million cases. We're nearing 16,500,000. And we've had more than 650,000 deaths, with the Victorian situation in Australia continuing to rise. Now, moving on from that side of things, I am still going to be looking at what's going on with coronavirus, but right now we've been advised that National Security Advisor Robert O'Brien, who is the security advisor to Donald Trump, has been tested positive to COVID-19. Now, interestingly enough, at the similar time to this sort of statement was coming out, Trump also said that he needed the governors to start opening up the economy and that they weren't going fast enough, even though the US had a 1.3% rise in COVID cases just in the past 24 hours. So that is pretty big numbers when you consider the population of the US and how many people have already been infected by COVID-19. It is problematic to try and open a company or a business or even a state when you have rising COVID-19 stats. Now, moving on from that, we are having a look at some virus, sort of that vaccine-based virus talk today. Moderna Incorporated has been in the news before. They've been in the news last week, and we were talking about them the other day, having some positive results on the antibody studies and, of course, the T-cell studies. Now, their stock price is sitting at $79.91, and that's all based on the vaccine news. However, their previous high was of $94.85 back earlier in the year. If you remember, Moderna Incorporated were one of the first companies to come out with some level of vaccine, and they have been one of the leading members of the total of 200 different vaccines that are available, or not available, but at least being researched, that they were on the top contenders for one actually getting to the market. Now, whilst we've got all of this stuff going on, there has been some interesting factors, and some people have raised the question as to, well, why didn't Moderna Incorporated increase more? They're obviously a fair way ahead of some of the other vaccine manufacturers. Well, unfortunately, I think the idea here is we've been living with the pandemic for so long, and the last time when we were getting virus cases and we were getting people talking about vaccines and releasing or jumping the gun a little bit early and saying they had something, was a little bit all preemptive. And so this time round, when it's happened again, when they might actually have some more sustainable results, they've not been able to actually get the same sort of press attention. And this is because the first time round, people saw it, they jumped in, they went, yep, this is going up, this might be a quick solution. But now we're not getting that same effect. And personally, I'm seeing it as people are being a little bit more cautious with some of the pharmaceutical companies. One of the reasons being is that the research has been said before that coronavirus vaccines have been in development for nearly 20 years with no success. So whilst there is more media attention and there is more money going directly towards one type of virus right now, it is still a difficult thing to actually trace and set up and get a vaccine rolling. So I think people are starting to look at the idea that perhaps we need to take our attention away and the focus away from looking at a virus vaccine as a recovery. Instead, we should be looking at companies that might be able to survive the pandemic as a whole, and we might need to consider the idea that we're going to be living with this for a very long time to come, in which case it changes how we think about the investment and the recovery process entirely. Now, moving on, we've got earnings season across the globe. I'm going to be talking a little bit about Australia and, of course, the US situation as well. From what I can see, we've had two earnings releases out today. They aren't too big on impact. One is a credit company known as Credit Corp, and they are interested in seeing on the debt side of things. But they've had some good results. They did see a little bit of a stock rise. Outside of that, I've been looking at the situation when we consider Victoria and the new lockdowns that are going into place. Naturally, earnings season this time around is going to be an interesting one to look at. Personally, I think we're going to be looking at real estate firms a little bit more. I think they're going to feel the pinch purely because of the lockdown setup and, of course, less people renting, less people buying. They're going to be seeing some numbers change around there. And, of course, banking entities who might have some extreme exposure to all of the mortgages and the restrictions on having mortgages for homes that they've had in place recently, where they are able to get clientele to default or defer at least payments. And apparently about 10% of those the mortgages that we have here in Australia have been deferred already. So that leaves them a little bit exposed. And if we look at the Melbourne situation and Victoria as a whole, then there are three leading banks there that are going to have problems. ANZ, NAB, and Bendigo Bank because they have the highest exposure of mortgages out of Victoria. Now, mining is likely to be the star because of iron ore prices. We've had some good results when it comes to mining in the past couple of months. Our export numbers have been gradually ticking away and going on the up and up. So we are likely to see that as a good contender. Fortescue Metals is likely to be the one that actually has a good year this year and does increase its dividend amount. So that is something to keep an eye on as well. But regardless of all this earnings season is an interesting one. People aren't going to be relying on the numbers wholly on their own. We have to expect that some companies are not going to be providing advice. Instead, we need to be looking at what's going on and how they've managed the companies throughout the pandemic so far and what their long-term expectations are and how they're going to manage it over the next coming months and potentially over a much longer duration. So think about the long-term rather than the short-term profits. Now, moving on to the US earnings season, we have the same sort of problem. However, this time round, tech stocks are the big one. We've seen tech stocks rising and rising and rising constantly on the US market, particularly the NAS 100 or the NASDAQ, where we have seen some phenomenal results, particularly from companies like Alphabet, Amazon, Apple, Tesla, all of those household names that you would surely know. Now, the big concern that I have for them is that they need to justify the price rises now. If their earnings season's results aren't able to justify the high price, then you are likely going to see many of those tech stock companies run a little way down on the price of their actual stocks. So keep an eye on that. That is something that I think you're going to have to keep an eye on very closely because as well, there are other markets right now that are operating as safe havens, which might mean that if investors are starting to see the idea of some of these stocks and the tech companies being a little bit hazardous, then they may decide to move across to the other ones that are available. Now, moving on, for the Fed meeting today, they're having a meeting, but the announcement doesn't come until tomorrow. I'm expecting to see more forward guidance come through on rates. I don't think we're going to have a negative rate occur. There will likely be inflation talk, especially if we've been hearing from Fed Harker in the last few weeks. And just because of the whole negative rates thing last time in June, they said they weren't expecting to do it and they weren't wanting to do it. And none of the other members that were in the FOMC really paid too much attention to negative interest rates. So I don't think that's really one on the cards. But however, the forward guidance in being how long will the rates stay at the rate they are? We already have an anticipation that the rates are probably going to be remaining low for some time, along with inflation. Now, their primary concern at the moment is to stimulate the economy and build that inflation level back up again because at the moment it is quite subdued. So keep an eye on that. That'll be an announcement tomorrow evening, most likely, and it will be something important for the US dollar traders out there. Now, looking at gold. Gold has just sitting under $2,000 per ounce. It is a historic level. It is really one of the high points of all time. Now, of course, in 2011, we saw some very big numbers there as well. And I'm just doing a little bit of a comparison today to give you guys a bit of an idea of what we're seeing and why it's actually going up. Now, when we look at gold at the moment, it's always been a safe haven. So when we see turmoil in other markets, investors tend to move their funds across to bonds and or gold. But unfortunately, at the moment, there are a number of problems that are going on. We have historic low rates. We have unlimited stimulus. We are supporting policies, and we have supporting policies from the fiscal and the monetary side of things. We have a weaker United States dollar, and of course, we have falling real yields for those bond prices and treasuries. Now, all of that on top of, we then have debt on more debt on more debt again. So all of those end up being a bullish precursor for gold. That's why the value is going up. Usually you would see some people going to bond markets as well as gold, but when you've got falling real yields, you will end up with people pulling the pin on the bonds and moving them into gold as well. So something to certainly consider as to what you might look at as a bullish move for gold and what the reasonings behind them actually are. Now, moving on for the news ahead of today, we have Spanish unemployment rate coming out. We also have CBI realized sales, which is for the pound. And of course, we have the home price index for the S&P composite and the US. And from there, we're also looking at the CB consumer confidence numbers coming out later tonight. So it'll be interesting to see how people in the US are feeling now that they've got states in limbo and have got a rising number of coronavirus cases. That's all I have for you today. Feel free to shoot me an email at talktoal@acy.com if you have any questions. And of course, don't forget to like and subscribe to this video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.